Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities cheered a decline in US bond yields and US dollar after a slower than expected rise in the US core inflation reports. Asian equities trended higher, boosted by China, after economic data showed that the fourth quarter GDP growth and December industrial production data remained strong in China, with the trade surplus reaching a record high. Gains were led by Chinese and Hong Kong equities and Indonesia, with gains of around 2 to 3%, while Malaysia, Philippines, and India lagged peers. Back home, Indian equities recorded a decline after last week's gain. The Nifty index fell around 1% for the week, driven by lackluster earnings reporting and persistent foreign investor outflows. Broader markets outperformed the Nifty index, with the Nifty Mid-Cap Index closing flat for the week, while the Small Cap Index was up 0.2% for the week. Among sectors, utilities, energy, and metals led the winners with gains of over 2.1%, while IT sector was the worst performer with a cut of around 5.8% for the week. The Indian fixed income market had a very volatile week, with Indian government bond yields rising early in the week as banking system liquidity fell to a sharp deficit and the US bond yields continued to trend higher. However, bond yields retraced lower after the Reserve Bank of India announced liquidity measures through daily variable rate repo auctions. For the week, the 10-year Indian government bond yield rose 1 basis point to close at 6.78%, while the 3-year and 5-year bond yields changed by -3 and 0 basis points respectively. The INR gold rose 1.5% for the week. Brent crude oil posted gains for the fourth straight week, recording a gain of 1.3 last week to close at $80.7 per barrel, as the latest US sanction on Russian energy trade added to worries about the oil supply disruptions. The INR came under pressure against the US dollar, falling to a new all-time low of 86.7 before closing at 86.61 per dollar, as rising crude oil prices and foreign investor outflows negated the impact of lower US bond yields and a decline in the USD. Coming to the macro updates for the week, the first was in India's consumer price inflation, which eased to 5.22% in the month of December 2024 from a 5.38% growth recorded in the previous month, but it was also lower than market expectation of 5.3%. The slight deceleration in consumer prices was driven primarily by a slower food inflation, which fell to 8.39% versus 9.04% in the previous month, while prices eased slightly for housing, but deflation slowed at a lower pace for fuel and light. On a monthly basis though, India retail prices were down 0.52%, the sharpest monthly decline in over a year. The second data was on India's wholesale price inflation, which recorded a jump at 2.37% year-on-year in December of 2024, higher than a 1.89% rise recorded in November and above market forecasts of 2.3%. The surge was driven mainly by a faster rise in manufacturing prices and a softer fall in fuel prices. Primary articles saw faster growth, manufacturing prices accelerated to a 23-month high, mainly driven by a faster increase in food products, textile and wearing apparels. Meanwhile, food prices moderated slightly. Monthly wholesale prices were down 0.38%, recording the second straight month of decline following an upwardly revised 0.45% fall in November. The third data was on India's trade deficit, which narrowed to USD 21.9 billion in December of 2024, compared to a deficit of USD 32.8 billion recorded last month. The moderation in imports was driven primarily by lower gold imports, which declined sharply to USD 4.7 billion in December of 2024. Overall, imports grew by USD 1.7 billion to USD 59.95 billion during the month, while exports eased by USD 0.4 billion to USD 38 billion. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.